What if I told you that you've been using RSI wrong this entire time, and that is actually a much more useful indicator than you have been led to believe? RSI is usually the first indicator that beginners are taught, but it's also the first one that gets completely disregarded because they're taught to use it wrong. So in this video, I'll show you why overbought and oversold is complete nonsense and how to actually use RSI like a pro to give you fantastic entries in trending markets. All right, so we are inside TradingView. Let me just show you where to even find RSI in case you don't know. Indicators, you search for RSI. It's the one that's called Relative Strength Index. It's going to look like this and be very ugly right from the get-go, but you can customize that yourself if you want. All right, so most people are taught to use RSI like this. You have your upper band and you have your lower band, your 30 level and your 70 level. Let me just draw that out for you guys, right? So we've got one line here and we've got one line here. And then you've got your oscillator oscillating in between, right? Most people, they are going to do this. They're going to tell you that this part up here, this is overbought, and that this part down here is oversold. And then it is as simple as when price gets down here, you should be a buyer because price is going to go higher because now it's oversold. And when we get up here, you should be a seller, you should short because price is overbought and we're going to reverse, right? So most people use these are the bands I'm referencing, by the way, down here. Most people are looking at RSI like it's a ceiling and a floor, okay? But it's not. I pasted this, I copied it so I could paste it for you. This is what I want you to believe instead. RSI is not a ceiling or a floor, it's a thermometer, okay? RSI is a momentum indicator, which means it shows momentum, right? So instead of using it to find reversals, you should actually be using it to spot momentum and trends, all right? That is where people go wrong. And let me show you exactly how to do that. So if we do what people usually do, right? As soon as we're up into the 70 area, oh, it's overbought, we should be careful, it's going to fall, it's going to reverse potentially, right? No, when it's over 70, because it's a momentum indicator, that is when the market is strongest. It only gets up there when there are a lot of buyers present, right? Because it's a momentum indicator. So let me show you how this mindset of overbought, we should short is so dangerous. Look at here, look at this, right? So right here, this is when we enter the dangerous overbought area right here, right? What happens? Price surges another 420%. This is Bitcoin I'm using for this example. It's the same for all markets, okay? I'm just using this chart now, okay? So we hit the overbought area. Oh, we should short, it's dangerous. No, the market is strong. It's a strong market. So as soon as we're up here, this is when we should look for trend continuation plays, right? Look at how much time we spend up here, okay? Same goes for down. Let's take this peak as an example, right? Right here, overbought. Is it really though? Right here, this is where we at. You know, the beginner RSI gurus are going to tell you that this is where you should be careful. This is where you should short. No, what happens? Price rallies, okay? So it's not a ceiling or a floor. It's a thermometer. It shows you that, hey, it's actually getting really hot, right? And the other way as well. As soon as you get down into the oversold area, that doesn't mean that, oh, we're going to stop here. We're going to reverse, right? See, this is right here is when we actually enter oversold and price sells off even further, okay? Now, Bitcoin has been extremely strong as of the last couple of years. So there's many more bullish examples than bearish, but hopefully that makes sense, right? It's the same again here, right? We just use this example. It's the same again here. This is where we're entering overbought. It continues again here. This is where we enter overbought. It continues, okay? So that's the first part of this video is that don't look at it as a ceiling or a floor, okay? Look at it as strength as soon as we enter those dangerous territories. The other thing that RSI is extremely good at is in trending markets, you want to use the 50 level, right? So overbought is 70, oversold is 30. The 50 level, the middle of the oscillator is actually really important, and people don't know this. When we are trending, right? When we're up here over 50, that means the bulls are in control. Prices are generally trending up. If we're below the 50 level, that means that bears are in control. But the 50 level is the reset level. So when we are trending up, when prices are going up and people are feeling FOMO, the very best place you can enter the market is when, for longs, when prices are going up, when RSI is over 50, that means we are in, bulls are controlling the market. That's the 50 level. The 50 level is going to reset momentum and prepare us for another leg, right? So here you can see prices are bouncing on the 50 level, and that gives us another leg. Then we get a leg up, and where does price bounce from again? 50 level, right? Reset, ready for another leg. What happens here? This time, I mean, context is always important, right? We go from an uptrend to consolidating sideways, right? Here we lose the 50 level. Bears are temporarily in control, at least they try to be. They failed the breakdown here. What happens? We reclaim the area, we bounce from the 50 level again, right? So 50 level on the RSI when we are trending is extremely powerful. You can see again here, after these big moves, price goes down, resets on the 50, and gives us another huge leg up, right? So RSI, 50 level, of course, as with anything, right? Don't just blindly use the 50 level because sometimes it's not going to work, as with anything else, right? Use it in confluence with your other things, with support resistance, with EMAs, with VWAPs, whatever else you use. But it's a fantastic confluence tool when prices are trending to look for continuation at the 50 level in confluence with other things. And funnily enough, right, let's take the bearish scenario now instead. What happens? Let's just take a final bull case again. Okay, we're breaking structure here. We're bouncing on the 50, gives us a leg up. What happens here? High time frame structure is broken and a downtrend is starting. We're now below the 50 level, below RSI 50, right? So that means bears are in control. We're in a downtrend. So what happens when we get a retracement up and we touch the 50 level, right? Great place to look for shorts, right? Or maybe sell bags that you had left over that you didn't take profit from here. It's a great level, right? So the 50 level, when markets are trending, is an amazing level for confluence with other things. And it's a great place to get into the market. It's usually where momentum is reset and the market is getting ready for another leg, okay? So this video was a bit short, I think, hopefully. It's now clear that RSI is not necessarily a reversal indicator. Of course, there's another part to RSI, which is you can talk about divergences and stuff like that. That's a video, that's a topic for another video. But hopefully you understand that that RSI is not a ceiling or a floor. It's a momentum indicator. It shows momentum, and you should not be afraid just because RSI is in the extremes. It actually shows the opposite of what you've been taught. It shows that one side of the market is extremely strong right now, and you should probably look to position within that trend, right? Or at least wait for it to get back to the 50 level and then position from there, okay? I hope that makes sense. We'll tackle divergences in another video. Thank you for watching, and I'll see you in the next one.